Hey everybody, Gary with Basecamp Trading. Let's take a look at an opportunity in gold today. Gold made a big drop during the morning session, so some real nice trading opportunities. This is our 240-minute chart, and you can see that in the overnight, gold set up this bear flag right here. We had pushed down, consolidated, set up the bear flag, and then this bar triggered it. And this was a really bearish bar that triggered it. Little tiny topping tail, and the entire body of that bar was all selling. The overall chart was bearish, 5 and 13 cross to the downside, 50 under the 200. Fast and slow line on momentum, MQ momentum crossed to the downside, below the zero line. So, I mean, just everything on this chart is screaming bearish. Lower highs, lower lows in a downtrend. This chart was definitely bearish. Triggered in that bear flag in the overnight. Again, not trading in the overnight, but that gives us an idea of the direction we're going to want to be looking at because we had a 240-minute trigger. And again, we know that if we get a 240-minute trigger, a 30-minute trigger, that those are the times when these larger moves are what we expect. It's reasonable to expect larger moves when we're in confluence with the higher time frames. And here's our 30-minute chart, right? And here's where that bear flag on the 240 triggered in the overnight. And you see it dropped down, consolidated, set up this power line. So we had a well-defined support line right here. This support line was at 1811 even. And you can see that price pushed down here to this line numerous times. Hit it there, 2, 3, 4, initial one, 5 times. So we hit this support line 5 different times in the overnight session, showing that this was definitely well-defined support. And then coming into the US session, it actually pulled back a little bit, pulled up into the moving averages, ended up finding resistance right here at the 13 EMA, left this really bearish bar right here, topping tail, entire body of the bar was all selling. So this was a really bearish bar heading towards support. If you're a really aggressive trader, you got to take the break of that low because again, that was a really bearish high low reversal bar. The high of this bar was higher than this one, the low was lower than this one, and it closed to the downside. So really bearish high low reversal bar. So if you're really aggressive, you could have shorted right there. That would have had you short around 1814. The low ended up being all the way down at 1784. So potential $4,000 per contract if you caught the bottom, which nobody is. Nobody's catching the bottom, but definitely a nice profit opportunity based on that. You know, if you shorted right there and just trailed each bar, you know, you definitely would have had potential to make a pretty good chunk of change out of that. We don't typically trade the 30-minute chart. We take the setups off of the 240-minute chart and the 30-minute chart, and then we actually trade them off our Renko chart. And we had some really nice setups off the Renko chart based on that. Right in here is where we came into the US session. This is where that compression was happening. And this was our well-defined support line at 1811. And we broke underneath that and then just made a nice move to the downside. All our moving averages in alignment, 18 under the 34, under the 50 SMA, under the smooth 50, under the cloud. Everything's bearish momentum. And we just started pushing down. And there's numerous ways you could have traded this. Typically, if you're trading multiple contracts, you're looking to take profit somewhere along the line and then just let your runner trail the pivots, especially in this situation because we knew we had a bearish 240-minute chart that had already triggered a 240-minute bear flag. We had a bearish 30-minute chart was already in a downtrend, also triggering a bearish high-low reversal bar. So we know that when we're bearish the 240s and bearish the 30s, that those are the times where it's reasonable to expect, and it's possible that we're going to get these larger moves. And so these are the times where you just let your runner trail. And again, if you're trailing pivots, you just would have just ran this all the way down, literally all the way down into target. We had our target down here at 1786, and if you were trailing pivots, you literally could have stayed in that trade all the way down into target. If you weren't quite that brave, you still had multiple opportunities to enter. We had the initial resistance or support break, and then look at all the Trender Pro 2.0 signals off the moving average. I mean, we had a wick off the 18 here, had one here, had another one here, here, another one there. Depending on how you're trading this, we were extended at this point in time. You're making some divergence. This would not have been a good signal to take. If you had, you would have taken a stop out. So what? Not every single trade is a winner. Another wick off the 18, fast line zero touch, fast line zero touch, another fast line zero touch, right down into target. So lots of opportunities to make some decent money in gold. Again, if you're trailing the pivots, you could have pulled, again, depending on how you traded it, at least $3,000 per contract. And trading into targets, as you know, is something we do all the time. So it's reasonable to expect a larger move. And again, trading into target had the potential to grab some pretty decent profit.